right. Getting things set up here. Good morning. Good morning. Good morning, traders. 11:29. My name is Daniel. We're just getting set up to go live here. So just get things going. Check my technology. Make sure that my technology is working as designed. I guess that's the most important thing for going live. My name is Daniel. I'm with VantagePoint AI, and we are going to be talking about trading the markets using AI. Matter of fact, today we're going to cover a step-by-step guide to options trading with artificial intelligence. We're going to get started here in just a minute or two once we get everything set up from a technology standpoint and we know everything is working as designed. This is a live session, so feel free to jump into the chat at any time. Let me know how you're doing. Get involved in the conversation. I think it's important that we do as much as we can here to understand the markets and understand the benefits of artificial intelligence. So we're going to get things going. Looks like everything's working as planned. 11:30 a.m. Eastern Time on the dot. Welcome, welcome, welcome. If you've never attended or been part of our VantagePoint Artificial Intelligence, our VantagePoint AI live events, we'll take maybe an hour. Sometimes it's an hour and 10, sometimes it's an hour and 30. Whatever the case is, we'll take as much time as we need to as methodically as possible, maybe as thoughtful as possible, walk through different strategies and different uses within the financial markets, how to set yourself up to be as successful as possible. I'm going to do everything from an analysis standpoint on my side in the VantagePoint software, which utilizes artificial intelligence, generative AI that is predicting stock prices and different pieces, momentum, and so many different things. But you can use whatever technical analysis tool that you want, of course, as we go through today's training. Hey, good morning. How's it going? Let's just make sure everything is working as fine. Looks like your audio, video are up and running. All right. Looking good, looking good. All right, let's dive in. Let's dive in. So let me just kind of reiterate what today's agenda is and who I am for those of you that just joined. I'm with VantagePoint AI. And today's agenda is we're going to be talking about a step-by-step guide to options trading with artificial intelligence and predicting the markets for options trades. I think it's a very valuable process as we walk through today's session in detail. If you have any questions, because it is a live session, jump into the chat box and myself and my team will be here to answer your questions. I personally have over 25 years experience in the financial markets. I've been deploying and utilizing our generative artificial intelligence here for over a decade. This is patented technology, but what we're going to walk through initially today is how to really just create a process when it comes down to trading the market that you can step through to make sure you're putting yourself in the best position possible. So let me just switch my screens here. I should be able to share this screen. There we go. As I said, we're going to be talking about a step-by-step guide for options trading. I think one of the big things that we've got to do before we dive into the material is just understand that trading is hard, right? Let's make sure we're all on the same page there. Trading is hard and trading involves risk. You shouldn't be trading with money that you can't afford to lose. After all, that's why they call it risk capital, right? If you can afford to lose it, then it's tradable capital in my book. Always minimizing your downside risk, maximizing your upside potential. Minimizing that risk is key. Good money management rules are key. I may share some user experiences with you today, and I'm sharing those with you to say that you're going to perform just like them. Their results may be atypical, but I like to share with you what other people have said and what other people are doing. After all, we've been working with and helping traders since 1979. So, over 44 years of dedicating what we do to helping you, retail traders in the financial markets. And we'll walk through some details and we're going to dig into some software and look through the details in a hypothetical market so that everybody can understand how to apply these strategies. So let's dive in, shall we? The first thing that I want to talk about, and just remember, this is not trading advice. This is simply education. I'm here to provide as much education as possible in any way that I can to help you, get to the next level from a trading standpoint. So let's talk about the first, maybe one of the most important pieces of trading, right? If we want to utilize artificial intelligence to predict the market trends and set ourselves up to be as successful as possible, we got to have a trade plan, right? Can I get a here? Can I get an amen? Something to make sure that we're all on the same page, because you got to know what to expect. You got to know how much you're willing to lose. You got to know what you're going to do in the markets before you ever get into the markets. So I always start A1 with a trade plan. And here's some key pieces to that trade plan that I think are important, and I want everybody to just to think about for a second. And that is, you got to have, first of all, your profit objective and your risk tolerance identified in advance. Remember, we're talking about a step-by-step guide here. The first step before you get into the markets and trade the markets with options trading or with artificial intelligence, got to have a plan. That plan involves a profit objective, meaning how much are you looking to gain versus how much are you willing to lose? You got to have that laid out in advance, and you got to have discipline to stick to it. Meaning, if I'm looking to gain 15% when I place a trade with a 10% drawdown, then that is the rule that I'm stepping through all my trades and all my planning with. And that's a rule that you can use day in and day out. Maybe it's 15% gain with a 10% loss on every single trade annually, whatever the case is. Have it laid out, have it defined, have it written down, have it saved, have it part of your plan, right? The next piece that I think is important is create some sort of risk management rules that are predetermined, meaning identify in advance how much you're willing of your capital to put towards a single trade, right? There's a lot of different rules out there, from the highly risky ones to say 3% of your capital to the more conservative ones that say 0.5% of your total capital shouldn't be more than that into a trade. Find one that matches your risk tolerances, your financial situation. Again, from an educational standpoint, everybody's trade plan is slightly different, and especially when it comes to risk management rules, got to have those in place. But determine it, set it down, write it down, and stick to it, right? That's one of the most important things. If it's a 1% per trade, great. If you've got $100,000 in your trade account, then you're willing to risk $1,000 every time you place a trade. So you've got to structure your trading to apply that risk management rule. And it is a rule. And in this case, rules aren't meant to be broken. That increases the risk, right? Then you're not managing risk at that point. Another piece of the trade plan that I think is very, very important as our first step into trading options with artificial intelligence is have some market analysis rules in place. If you know how much you're looking to gain, how much you're willing to lose, and what you're willing to risk per trade, well, then now we have to get into the steps that are going to help you identify when it's a good time to trade. A good example could be, I want to see 2 of the 3 major indices, the S&P, the Dow, and the NASDAQ, bullish, or not at resistance, or not at all-time highs. You've got to have some sort of overarching market analysis rule to say it is all clear to trade and risk your money. Because that's what it comes down to. When you're trading, you're risking your money. So you've got to have some of those rules laid out in advance, in my opinion. Again, this is education. In my opinion, I'm not providing trading advice here, but that's an example of something to write down and have part of your plan to say, if I don't see this happening from an overall market standpoint, well, then I should go ride a bike, all right? Twiddle my thumbs, find something else to do, not force the trade. That's why it's called a plan. Stick to the plan, right? The other thing are entry and exit based rules. So let's say you've got your profit and your risk tolerance objectives lined out. You've got your per trade risk management rules in place. The market is favorable and matches your overall market analysis, say it's all clear. Now I've got to have some indicators or a set of indicators or some rules that say, okay, if we're all clear from everything else, here is what determines that this is a good opportunity to get into. So these are kind of the 4 pieces of a trade plan. Obviously, you can get a lot more detail than this, but I think, in my opinion, these pieces of a trade plan can really help somebody understand when it's all clear, when it's not, and how much to risk. And this way, you don't have to think about it. You don't have to think, should I get out? Should I get out? Is it going to keep going? If you're at your predetermined risk tolerances, well then, you don't have to think about it. It either hit it or it didn't, right? It's binary in that situation, if you've got that discipline. Does anybody that's here listening now, I know we've got a lot of people signed in and live, just checking my stats here to see, does anybody here that's listening live and logged in, have any questions related to that? If you do at any point, jump into the chat box, or maybe you've got a really great trade plan, or maybe you've got an example of a piece of this trade plan, because this is just one example. But if you've got a piece of it that you like, you got a hard and fast rule, share it with us. This is an opportunity. This is educational. This is a place that we can all learn. There's no judgment here. So if you've got some of that and you want to hop into the conversation, by all means do, right? So this is in our step-by-step plan to trading options with artificial intelligence. This is step one, which means we haven't gotten options yet and we haven't gotten to the AI yet. And that's why this is step one, is because taking all of that out of the equation, you've got to have your mind on your money and your money on your mind. From somebody famous said that at one point, right? All right, let's keep on rolling. Let's keep on rolling through this. Now what we're saying is, let's talk about options. We've got our trade plan set aside. We've got our details. Let's apply it to a certain trade strategy. First of all, let's talk about why I love options. And the first thing that comes to mind when I start thinking about options is the leverage, right? If you're an options trader or you're thinking about getting into options, one of the great things about options trading is that you can trade a market that, per share, a security, for instance, a stock that, might be a couple of $100 or a few $100 per share. You can trade that security through options with a lot less money, but still get access to the potential gains. That leverage is one of the reasons why I love options so much, is because that leverage possibility is there. We'll get in a little bit more into that in a little bit more detail, but that's the first thing that I like to think about when it comes from an options standpoint. The next thing is liquidity. It's not often that you find a stock that has options traded on it that isn't liquid. There's people out there looking to buy and sell options all the time, and you can see the amount of open interest, and you can use that open interest to your advantage. So that liquidity means I could, buy and sell my options fairly easily because of the kind of stocks that trade options. So I like that liquidity side of it. And then the unlimited profit potential. This goes along with leverage and liquidity. If I've got liquidity and I've got leverage in my favor, then the opportunity to earn using options is bigger than just trading the security. A lot of times when you see a security move a couple of percentage points, 2-3 percentage points, and you go check that option moved 15-20% in that 2 or 3 point move of that underlying asset. That profit potential that's there is something that is very attractive in my mind from an options trading standpoint. Protection. Not every strategy includes options, but from a protection standpoint, there are a lot of options traders out there that simply, write covered calls. They sell options on stocks that they own to mitigate their downside. Meaning, if I am an investor in a stock, let's say I am an investor and I've been holding McDonald's for an extended amount of time. In this hypothetical scenario, if I've had it for 10, 15 years, the likelihood that I'm willing to sell that now for a quick gain is low, which means I'm an investor in that stock. I've held that position for a long time, but when McDonald's goes down, I don't necessarily want to lose money. Well, I can use options as protection by writing some covered calls, meaning I'm selling a certain kind of option so that as that stock goes down, I can mitigate some or all of those losses on the slide down. So that protection aspect from options is very, very attractive to me as well. One of the other things is predetermined risk. We'll get into this a little bit more, but because risk is so important, managing risk is so important, that was really the first, 2 steps of the trade plan is about risk and risk tolerances. Right? In my opinion, this is one of the most attractive things when it comes to it, because I know getting into that option how much I stand to lose before I ever place that trade. Meaning if my risk, remember going back to that trade plan idea, if I say $1,000 is how much I'm willing to risk, I can go buy an option and make sure my premium does not exceed $1,000. Why? Because in the options world, the most that I'm going to lose on that option is my premium. It could go to zero. I could be completely wrong and I lose $1,000. Well, that predetermined risk, I like that. That helps me manage money and manage risk, which is why, I say it again, I love options. Now, this is my list. If you've got a list that you want to share, or maybe you've got something you want to add to it, jump into the chat box right now. You know, this is a live session. I'm here, I'm listening, I'm human. I'm keeping my eye on the chat box. If there's something there that you would add to these 5 things, or maybe you want to comment on one of these 5 things related to options, then, you know, let me know. Let me know. I'd love that. We're going to dig into some of that today. Aaron's asking, are there videos on how to use VantagePoint AI to find the ops for those who understand options? Yeah, absolutely. Absolutely. If you're part of the VantagePoint family and you've got the VantagePoint software, certainly you can reach out. We've got in our VantagePoint University a lot of education. We do training videos multiple times a week. If you're not part of the VantagePoint family and you don't have the VantagePoint software, Aaron, you can reach out. You can go to VantagePointForecast.com. Anybody here can go to VantagePointForecast.com. Maybe you've got a deep understanding of options and you want, you know, better tools and generative artificial intelligence to help you. Go to VantagePointForecast.com and we can help guide you in that direction to finding some of those educational videos. All right, good. Let's keep it moving. I appreciate that. Let me just take a look. Options trading key points. This is, let's keep on going down the path a little bit. We're going to start with some beginner stuff, and then of course we're going to dig into the details. You know, the practice of buying and selling options contracts, you know, basically gives the buyer or the holder the opportunity to buy or sell that underlying security by a certain date at a previously set price. For those of you that are newer to options or thinking about options, those 2 things are key. Those 2 things are very, very key to an options trading scenario. You got to remember that date piece of it, all options expire. And once that expiration date has come and gone, that option is worthless. And that's a piece that a lot of traders don't necessarily, you know, think about. Hey, Jeff, I see your question. Does seasonality affect options? Is it the other way around? Absolutely, seasonality affects options. Yep, Jeff, good question. There's previously set agreed upon price called the strike price. This is a key point. Expiration and strike price are 2 things that as an options trader you've got to think about, and 2 things that we're going to walk through today and apply the artificial intelligence to help you understand that. If the value of the underlying asset exceeds the strike price before expiration, that can be a very valuable thing for that option buyer. And that's why these 2 pieces are so key: expiration date and strike price. And we'll talk through that in a little bit of detail today. And just remember, if you've never traded options, options aren't executed by buying shares. Options are executed by paying a premium for the option. Now, that premium is set by a certain number of shares known as an options contract, but you're not actually buying the shares at the point. You're buying the right to those shares at some point before the expiration date. Again, not going to dig into a whole lot of detail on it. If you're a beginner to options, then certainly reach out to us. We can happily walk through some of the benefits of using artificial intelligence in those scenarios. Just remember that because you're paying a premium for the option, you can't just buy or the rights to one share, right? You'll be able to buy the rights to 100 shares at a time. 100 shares is the options multiplier that an options contract is calculated in. So if it's a $5 per share option, you got to get 100 shares, so you multiply $5 times 100, and that would cost you, that one contract would cost you $500 for that option. So again, without getting too much into the details related to that, because I do want to get to the artificial intelligence, just understand that there is a lot of value in understanding the expiration date matters, the strike price matters, and any advantage that you can get to help you understand how to play the options game, considering those 2 things, is a leg up. There's a lot of options traders out there, and in my opinion, you got to have an edge. So let's talk really quickly on the 2 different types of options, because I think it's safe to say that these are the 2 main types. Keeping it simple, we're talking about, first of all, a call option. That gives the owner the right to buy a stock. You buy a call option on assets that are expected to go up in price. Then you've got a put option. You're buying that on stocks that are expected to go down in price. You can combine these, you can buy some, you can sell some. There's a lot of different vertical spread strategies. There are iron condor, there's so many different strategies out there related to options, but they're all based on these two things. Call, buying a call means you think it's expected to go up, and buying a put means it's expected to go down if you're an options buyer, right? If you're an options seller, then you just flip that equation around, right? If you're an options seller, right, and you think a stock is going to go down, you're not going to sell puts because you want to keep the premium. You're going to sell calls. So just a little idea there that calls and puts are the keys to options trading. Some of the other factors to think about, right? Things to consider. Strike price is a previously set agreed upon price, right? It determines the profit in an unexpired option. We were talking about that. This is a key options factor that we have to remember. Time till expiration. Remember, the expiration date is the last day that an option is valid. And then volatility. These three things right here, these three things are key to making up that premium, are key to making up the value of that option. And that's why I'm going back over these, because again, if you can get a leg up, if you can get some help in determining better strike prices, right, until understanding what maneuvers to make up until expiration or how volatility could impact that option, if you can gain some advantages there, that could really, really put you ahead above a lot of the options traders that are out there. And that's what we're going to do today with the artificial intelligence in VantagePoint. But I wanted to create a baseline so that we're all on the same page, right? Let's talk about volatility a little bit more, because that is a key piece of this. If we look at volatility, if we want to explore volatility some, understand in the options world, there's something called implied volatility. If volatility is basically, if I go back a slide, how wildly the market prices swing, right? You hear about the volatility in the markets is crazy. Well, if volatility is high, you're expecting larger swings in a shorter amount of time, right? It's kind of wild type of. If volatility is low, then you're expecting smoothness. Could be trending up, could be trending down. You're not expecting wild swings in price, right? From a volatility standpoint. Well, if we take that into the options world and we think about something called implied volatility, that's the market's forecast of the likely movement. The likely movement. Implied volatility means that if volatility is basically a measure of how wildly prices are swinging, implied volatility is a measure of how wildly prices are expected to swing. And if implied volatility, or IV, is high, well, then that's something that's got to be considered. If IV, or implied volatility, is low, that's something that's got to be considered, because IV is often used to price options contracts. Think about that. If the implied volatility, or the swings in that underlying asset, are expected to be fast and furious, well, then the likelihood that the price can go up and hit your strike price is high, which means the option seller is okay taking the risk. They just want more money to take that risk, which is why the premium rises in higher volatility scenarios, right? In lower volatility scenarios, it's opposite. So you got to remember that. Supply and demand at the time, and time value are major factors, meaning how many people or how much interest is there in that underlying asset. Supply and demand can be read as support and resistance. That's a very key piece from an options trading standpoint in my book, and it's a determining factor, especially when you're thinking about IV. Time value, how much time do you have to expiration? A lot of people forget that the closer you get to your expiration, the faster time decay works. If you don't know what time decay is, it basically means that your option, that underlying asset has to move in your favor up to your expiration date in order for you to make substantial gains. If that option moves sideways, or that underlying asset moves sideways all the way to expiration, it didn't go down, it just went sideways, your option is losing value, because that underlying asset actually has to move up, so that option increases in value more so than time. That's an important piece of all this. We'll dig into that in a little bit more. And just understand that IV usually increases in bearish market conditions and decreases in bullish market conditions. As an options buyer and options seller, that's important to understand. As things go down, fear goes up. When fear goes up, volatility goes up. That's usually a bearish scenario. So thinking about that and kind of putting this all together can really help you understand when you apply this to your technical analysis tools and when you're looking to make your next step. And in this case, my next step is going to be into the VantagePoint software that I like to use to do my analysis. Then you know what you should be looking for. So in this case, thinking back to the beginning of this session, thinking back to that trade plan, if I go back a few slides to that trade plan, I think I've got them back in here somewhere. Let me see. If I go back to the trade plan slide, the first thing that I want to remind everybody of, I guess I could have, there it is the fact that we've got to understand the overall market analysis rules. Your profit objective, your risk management is going to be specific to you, your tolerances. If your rule is that I want to see some bullishness in the overall indices before I make a decision to buy an option, then that's the first place we're going to go, and then we'll explore some entry and exits rules based off of the artificial intelligence. So I'm just going to pop into VantagePoint here. Here we go. So I've got VantagePoint pulled up on the screen. Some of you may be familiar with this, some of you may not. But what I'm looking at, this is the software that I choose to do my analysis on because it does employ artificial intelligence, generative AI that is actually predicting price trends, price, predicted highs and lows, predicted momentum, so many different things. Volatility is predicted in this software, and we can dig into the details some today. But of course, if you've got any questions or you want to dig into it more one-on-one, you can always reach out. What I'm doing first is that step in that trade plan that says do some market analysis and understand what the market is expected to do. And why I keep saying expected to do, for those of you that I haven't trained or interacted with before, VantagePoint predicts trends 1 to 3 days in advance with accuracy up to 87.4%, right? Which means, think about how high that accuracy is. But it's not 100%. It'll never be 100%. Heck, if somebody tells you they can forecast a trend with 100% accuracy, you gotta ask yourself, why are you even talking to them, right? But in this case, the software has been proven, is patented technology to forecast trends up to 87.4% in advance, 1 to 3 days in advance. So that's why I rely on this technology. So what we're looking at here, you can see we've got the S&P 500 up on the screen. If you're looking at the screen right now, it says S&P 500, and we've got 3 months of data. Try that again. 6 months of data. January 11th to July 11th. July 11th, from a date standpoint, that is today's date. This forecast came out at 6:30 p.m. Eastern time last night. 6:30 p.m. is when the artificial intelligence updates so that it can forecast for the next 1 to 3 trade days. So how I use it, 6:30 at night, first thing in the morning, depending on what my day looks like. But before the next day market opens, doing some analysis in the software and digging into the details, right? And in this case, what I'm looking at here is I can very clearly see. I'm gonna get a pen here so that we can all see. What I can clearly see here is that VantagePoint has been, from a long-term perspective standpoint, bullish about the S&P 500, right? Bullish about where the S&P 500 is going and expected to go. What we're looking at on the screen is called a predicted moving average. Matter of fact, there's 3 of them. This is the triple crossover, and it's one of the predicted moving averages that has 3 different time studies in it, all predictive, right? The light blue line has a 1-day prediction in that calculation. The medium blue line has a 2-day prediction in that predicted moving average, and that dark blue line has a 3-day predicted value in that moving average. And the reason I'm using this is to understand, again, the overall market analysis. Where is this expected to go, right? And what VantagePoint is saying here is that there's overall bullishness, and there has been overall bullishness for several months on the S&P 500. But I can take this deeper. I can take this deeper to see that from a resistance standpoint, it has set and retested a resistance level up here, right? I mean, it's very clear. Everybody should be able to see it right here at the top, right where these arrows are pointing. VantagePoint has some very powerful tools in it that I like to use. And you can see, it's, let's call that 4,500, right? 4,494, 4,500 is that resistance level. Well, the current price of the S&P is not there, which means it's got some room to that resistance level. It has the opportunity to increase in value. Well, that opportunity to increase in value shows that there is still some bullishness. A little bit of consolidation happening, but overall, from a trend standpoint, we have some bullishness. I also see a gray bar over here. If I zoom in on this, you can see this gray bar right here. This is a predicted high and predicted low, and it's got some shading on it. It's got some green shading on it. But what it's saying is the artificial intelligence is generating. That's why I've been calling this generative AI. It's generating a predicted high for the next trade day and a predicted low for the next trade day. Both of those figures are higher than the previous day's high and low, which is why these are slightly shaded green. So again, I'm getting some short-term bullishness overall from the artificial intelligence. I can also see that some of my other indicators, this is a predicted strength indicator, turn green. It's called the predicted neural index. It's giving me some bullishness. I do have 2 of my 3 predictive differences being bullish, with one of them being bearish. So not all the indicators I'm looking at so far are indicating bullishness, which is one of the things that I love about this process. Is remember, what we're doing is that first step in that trade plan, doing our market analysis, because this is a step-by-step guide that we walk through. That piece dictates that I need to understand whether the market or the indices, the overarching market conditions, are bullish, bearish, or consolidating. So I'm getting, here's a predicted RSI. The artificial intelligence is capable of predicting the RSI in advance. And in this case, you can see that the low here is higher than the low here in the entire trend. So we've got more bullishness going on. We can see that volume shifted from bearish volume to bullish volume. So we're getting a bullish volume as well as lower ATR. Lower ATR indicates bullishness as well. So I can simply walk through my predictive indicators like predicted percent R. This has predictive information in the formula generated from the artificial intelligence telling me that it's got higher lows in this ATR calculation in this trend, and there is some overall bullishness expected. So when I look at this chart, and hopefully what you're seeing on this chart is making sense to you, we're getting more bullishness than bearishness. A little bit of consolidation, but the S&P overall has bullishness. I can do the same analysis on the NASDAQ. Look, I just switched this to the NASDAQ as well, and I can walk through my predictive indicators. And I can see that there is resistance up here. There is room from the close yesterday to resistance. I've got a predicted high and a predicted low that are higher. Once you create your rules and you practice those rules and you use those rules in the markets to make trade decisions, you start to be able to do them very, very quickly, right? So just from an educational standpoint, I always like to apply these rules for an extended amount of time, whether it's a month, whether it's 60 days, 90 days, because I've got to create the process of using these rules. So when I jump into my VantagePoint software, I don't have to really think about it. All in all, again, I can walk through my predictive indicators, my predicted high, predicted low. I've got a little bit of bearishness with a predicted neural index, but I have more bullishness and consolidation with the predictive differences. So a very similar reading. I've got more bullish volume on the NASDAQ than I had on the ES. You can see that that's the case there. I've got bullishness, predicted percent R tells me that's creating higher lows again. So overall, I can see I've got more bullishness than bearishness, and this helps me understand my first rule in my trade plan, that market analysis. And then I can go to the Dow and do the same thing. Now, immediately on the Dow, I can see there certainly is some bullishness, but it has more bearishness than some of the other markets that we've already taken the opportunity to look at. It doesn't mean that the Dow is expected to be bearish. It just means it's not as strong as the other markets based on these predictions. We can see that there is still a lot of bullishness going on. So from an overall market standpoint, it's safe to say that I have enough bullishness for my trade plan to say, okay, if you can find something using your tools that is supported with your trade plan, that has some good indications of good entry opportunities, Or if you're in position, this is something that you can use your indicators to understand that overall there is bullishness expected in the S&P, the Dow, and the NASDAQ. Didn't say some major rally, didn't say anything like that, just some bullishness. And that's one of the things that I want everybody to understand, is that if you can understand that there is some bullishness in the markets before the markets ever open, with the help of predictive information and with the help of artificial intelligence, in my book, that's a huge gain. Remember, you're trading against other people. For you to win, they've got to lose, which means you need to stack the odds in your favor. You need analysis and tools that can put you in a position to profit more often. That's why I use VantagePoint AI, because I feel like that's a major thing. But all in all, so far in our step-by-step guide, we now can go look for an opportunity for a new bullish option. Now remember from our conversation earlier, you're buying a call on on a stock that you're expecting to go up. If we've got bullishness in the markets, then we go look for stocks that are expected to go up. So the next step in our trusty process, after we've developed our plan, we've developed our risk tolerances, we've done our overall market overview, is to go scan and find an opportunity to find an uptrend, right? That's what it comes down to. So I'm going to go into my Intelliscan feature. If I just go right here in the top left, for those of you that have VantagePoint and are part of the VantagePoint family, if you've got some dry capital, you're available, or dry powder I like to call it, you can get into a new position. Well, then the next place you go after you do your market overview is to the Intelliscan, right? Maybe if you're not a VantagePoint user yet, there's, I'm sure, a scanning system or a way, a process, a method that you have to go find opportunities that match your market overview. When you're trading along with the current of the markets and the markets are bullish, well, then you can go look for some bullish opportunities. So I'm just going to go open an Intelliscan. I've got a lot of Intelliscans that are predetermined, that I created, that I modified. I'm going to go to my bullish continuation scan with IV. Now, the reason I'm pulling this out, this is a name that I gave this scan, right? I made the scan and I gave it the name, so I know exactly what it is. But let me explain for you that don't use VantagePoint what this scan is, and it can help, highlight some things in your own scanning tools, right? It's not a requirement to use VantagePoint. It's a good idea. It's a proven technology, but I'm not here to sell you the software. I'm here to help you understand a good step-by-step guide to put yourself in the best position possible. So whatever scanner you want to use, understand that the market has been trending bullishly for quite some time. This isn't a fresh reversing market. This is a market that's been bullish for quite some time. Heck, the S&P is up, 15% since the beginning of the year? So I'm not looking for a fresh new opportunity. I'm looking for something that has a fresh bullish move expected. Here's the difference between the two. If a stock is going lower and then it reverses and starts going higher, that is like catching a bottom, right? That's not what we're talking about here. What we're talking about is finding a stock that has been trending somewhat bullishly, but is expected to keep going bullishly in the future, because that's what the market's been doing. The market has traditionally, this year so far been going higher. So I'm going to find more opportunities that are going up that are expected to move higher than I am new ones that are just now finding new bottoms and reversing. It doesn't mean I can't do that. I can certainly do that, but I'm going to start by looking for stocks that are moving up and are expected to move higher. So here we go. Let me walk you through the indicators that I've put into my scan. And these are not fundamental indicators. I'm not using fundamental indicators in this case to say, what's PE ratio and when are earnings and what were earnings, what's the revenues look like. I'm not using any of that at this point. I can, but right now at my scanning point, the VantagePoint software has done a lot of that for me, because if it can't be forecasted, if the artificial intelligence can't do the global market analysis and predict the trends in advance with accuracy up to 87.4%, well, then it's not even in the software. If you can't get over 70%, it's not even in the software. So I don't have to be overly concerned with the fact that I'm going to come across a bad stock, right? In that case. Now, obviously, you still have your risk plan. You've got your profit objectives. You got those things you got to lay out. That's a personal preference. But because it's in VantagePoint, I know I've got some confidence here. Hey, Lane. Great. I see Lane's message. Thanks, Lane. Lane is our president here at VantagePoint AI. I see he jumped into the comments section. Thank you for joining us, Lane. Always great to have you in these sessions. Lane has been involved with VantagePoint his entire life. And I can tell you, our motto of empowering traders daily through our live sessions, through our coaching, through our software is something that he lives and breathes. So thanks for popping in, Lane. I appreciate that. Stay a while, why don't you? All right, so looking at the chart, you can see right here, I've got my bullish continuation scan up. And just based on how I have it filtered, because I saved this with predetermined filters, it's gone through 1,651 different assets. Look in the top left corner here. And it's filtered out 1,464. That means there's 187 that are meeting my current criteria for the way I have my filters set. And yes, I'm going to show you how I have my filters set. I have no reason not to show you that. We'll walk through it step by step. Perry, I see your question. Perry's asking, will this presentation be archived in VantagePoint? Yeah, Perry, if you haven't already subscribed to the VantagePoint AI YouTube channel, subscribe. And there is in the video section, there's a little button that says live. You can click on the live videos and you can see all the past ones. This isn't the first one we've done. There's several in there. Jump in, watch those old ones. You can watch this one. Absolutely. Absolutely. Thank you for that question. And that's just not for Perry. That's for anybody, everybody that wants to catch this on the replay or watch it again. It's there and it's available content for you. All right. Free. I should say free available content, right? Why not soak it up? All right, so let's just walk through this scan step by step so everybody understands what a good step in the process is. And the step that we have to trading options with artificial intelligence, where we are right now, because we've gone through several of them, is scanning for an opportunity that is expected to be bullish. So remember, I've got a short-term crossover. I've got the one-day predicted crossover. This is a predicted moving average that contains predicted typical price. Right? Predicted typical price of one day. I also have a medium-term crossover that contains 2 days of predicted price. That predicted price is generated by the artificial intelligence. You know, let's get on the same page for a second. Let me just stop for a second to make sure we're all thinking about this the right way. Generative AI is something you've probably heard a lot about lately. I mean, it's everywhere. It's in the news, it's on the radio. I mean, you read about it online, it's everywhere. What generative AI means, and if you didn't catch the session last week, go into those lives and take a look at it. It basically means artificial intelligence that's doing deep machine learning. It's using neural networks to figure something out and generate text, pictures, numbers, how we've been utilizing it since 1991, because we are not new to the generative AI game. Matter of fact, we are pioneers and leaders in it, so much so that we have patents on utilizing artificial intelligence to generate predictive market data. So that's why I keep saying that. I wanted to make sure we understood that. There's a lot of companies that are getting into it right now, but one of the reasons why I depend on this software specifically and why I'm so proud to be part of VantagePoint is we've been deploying that technology since 1991 for traders like you to utilize. It's been available. If you don't already have it, it's been out that long, and you can certainly get it anytime you want. But back to what it's generating here in the long-term crossover, the AI is generating 3 days of predicted price to create that predicted moving average. Now, in these predicted moving averages, I have the ability to filter and say, only show me the ones where the predicted moving average is bullish. See that? Direction up, direction up. I've got these set to say direction up. So it's only showing me the ones where the predicted moving average is expected and moving higher. I love that. It's doing the work for me. I took a few minutes to set it up in advance, and now it's going to do the work for me. I also talked about this little red or green box down here. That's the predicted neural index. And right here, I can actually filter using the artificial intelligence to tell me when the predicted neural index, and it's exactly what you think, neural like the brain, is bullish. It means that there is strength. So I set that up to say, go find the things that have strength in price. And then I've gone even further to say, you know what? Find the things that are building momentum from a predicted moving average standpoint, meaning they've been they've been trending for a little bit of time, 1, 2, and 3 days from a momentum building standpoint. I've got those set to up as well. Regardless of the scanner you use, understand one thing. It's my opinion, this is not advice, but it's my opinion that your scanner should do the work for you. You obviously got to put in some of the filters, some of the information, but once it's in, you should be able to pop that scanner up depending on the market conditions, your trade plan, and the strategy you're looking to deploy. This is a specific options trading scan, and it should be able to do the work for you. If the work that it's doing is based on the intermarket analysis that VantagePoint does, and it's based on predictive indicators, well, in my opinion, that's the best, of course, right? And I've been utilizing this now for, 11 years. So very, very powerful. All right, so moving on, predicted trading range. Remember we looked at the fact where the predicted high and the predicted low, those numbers that are being predicted with the artificial intelligence are higher than the previous days. I've got it set to say only find the ones that are expected to be higher. So again, my scanner is doing the heavy lifting based on that artificial intelligence. I have a filter to only go find things that are optionable because we are talking about options today. And then I'm going to scroll over. I've got close price set. You know, maybe I've got some filters. You could, in some cases, say, you know what, I only like to trade options on things that are above $50. You could do that. I'll leave that up to you, but that's something that's filterable. Same thing with volume. I've got volume set to things over 1 million shares. Again, remember talking about liquidity. I want things that have 1 million shares or more traded. Some of you may prefer dollar volume. Dollar volume is a combination between the close price and the number of shares traded. I can certainly add dollar volume to this scan. In the VantagePoint software, it's very easy because all I do is I click on dollar volume, it adds it. I can take my filter off of volume because what dollar volume is going to do is it's going to go find anything that has volume. You know, let's say I set it to 25 million or more, right? Here's dollar volume. I'm going to slide it over right next to volume so you can see what I mean. It's a factor of volume that you can use to bring in those things that have a higher share price but lower number of shares traded. I'm going to change this to greater than, and I'm going to do 20 million. There we go. So that's one way to slice and dice your data to get to information that can help you, determine what the best opportunity is for you. And in this case, I've got it set at 20 million. You could go all the way up. Let's say you go up to a good dollar volume. In case you're wondering, a good dollar volume, in my opinion, is to use 35 million or more. That's something, and dollar volume is something a lot of institutions like to use because a good example is CMG. Chipotle doesn't have 1 million shares traded, right? You can go look up CMG and see it doesn't have 1 million shares traded, but from a dollar volume standpoint, it has well over 35 million traded because that multiplies the close price times the number of shares. And you can see we've got that set up there where we've got 35 million set. You can use either that or you can use volume. It's up to your own personal preference. If you have the VantagePoint software, and you can set your volumes where you think they match your trade plan the most. In this case, I'm just going to go back and I'm going to put 1 million shares traded in volume the way we were when we started. I just wanted to take that little aside to show you guys some of the versatility that you can do with this scan. All right. So we've walked through our predictive indicators in our scan so far. We haven't opened up any charts yet from this scan. This is still the S&P, the Dow, and the NASDAQ, right? I want to go into implied volatility for a second because we talked about that in the slides earlier today. And implied volatility can help you understand a lot of things around where that option, whether or not that option is a good selection for you. I've got a couple implied volatility indicators in the VantagePoint software. You may not have these in your tools or not. Just understand that they are looking at things differently. Implied volatility is giving you the IV number for that asset. It's a good measure to use when you're comparing, for instance, the volatility of one stock to the volatility of another stock option. If you're comparing those two IVs, IV works out really well. I like to view it. I like to have a good look at it to make sure that I understand it. But implied volatility rank, in my opinion, speaks more to me. And here's what implied volatility rank is. Again, another great tool. Implied volatility rank is going to look at the last year of volatility for, in this case, CG, the Carlyle Group. That's the first one on this list, by the way. We'll explore that one. It's got the lowest implied volatility rank, that I see on the screen. It has the lowest implied volatility percentile. These are two different measures. But what implied volatility rank, or IV rank, is going to do is it's going to look at the last year of this stock's IV. And you can see that CG has had a maximum IV of 417.91 and a minimum of 13.53. It's going to look at that and it's going to say, okay, over the last year, looking at the min and the max, where does the current IV fall? Well, the current IV is 1710, as you can see in that little pop out. The little pop out says 1710, but you can also see right here on implied volatility, 1710 for the July 21st expiration date. This doesn't mean that I'm buying the 21st expiration date. This just means I'm using the next monthly expiration as a measure, the closest monthly expiration as a measure of IV to understand whether or not this asset or this option makes sense for my trade plan. So it's looking at the July 21st expiration and it's saying that that IV ranks, look at that, 99.1% of the time IV has been higher. It's safe to say that that is pretty low IV, because what the IV rank is saying at a 0.9, it's saying that 99.1% of the time implied volatility is higher, or only 0.9% of the time is volatility lower. That tells you how the current volatility ranks for this stock, for this expiration over the last year. Let that sink in for a second. If this is saying that CG, the Carlyle Group, volatility has only been lower than it is right now, less than 1% of the time, that is pretty darn low volatility. Answer me a question in the questions box. I'll give you guys a second. I'm going to get a drink while you answer this question. And my question is, if I have low volatility, what does that traditionally mean for share price? All answers are accepted. No answer is a bad answer. So go to the questions box really quick and answer that question. I'm going to get a drink really quickly here. Big jug of water, right? I might be a little bit behind on my time, but always got to have water nearby. All right, let's take a look. There you see. Oh, I see your question, Shiva. Not really answering my question, but I see your question. We're looking at volume traded. Can you show how to have volume and volume traded? That's what we're looking at, my friend. We're not from an options standpoint. We're talking about the underlying asset, right? VantagePoint forecasts the underlying asset so you can apply your options trading strategy and use your options trading platform to put yourself in a better position to profit. But it's predicting the underlying asset, all right? Thank you, Phoenix. Appreciate that. Yeah, and you're right. You're answering my question. Price higher, right? When you take a step back and you think about volatility, right? When you think about volatility is low and things are smooth, there's not a lot of fear, then yeah, prices are traditionally expected to be higher, right? Used to be going good with your money. Not sure what you mean, Joseph, but yeah, that lower volatility for a bullish trend means a good thing. All right, I'll take it as that. Thank you for that. All right, let's keep on rolling. Implied volatility percentile. Remember, CG had the lowest percentile, and that does the same thing. It looks at the last year of volatility, right? It looks at the number of values, and it tells you how often those values have been in the area it is right now. And it's saying 99% of the time, the volatility values of the last year have been higher. So not only is it ranking really low, but it's not often that it's down this low, which means we expect prices to move higher. So when I slice and dice it, what this is telling me from an IV standpoint, let's back up. Let's talk about what this is telling me from an overall scanning standpoint. From a scanning standpoint, the generative AI is saying this trend, the one-day trend is expected to be higher, the two-day trend is expected to be higher, the three-day trend is expected to be higher. There's current predicted trend strength. There's current predicted trend of momentum. The predicted trading range, the high and the low that's forecasted with the artificial intelligence for the next trade day is expected to be higher than yesterday's. So the predictive indicators are saying up, 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 up in this situation. And my implied volatility is saying implied volatility is at some of the lowest level it's been, which means prices are expected to rise. If I'm looking to buy a call, would the CG group present itself as an opportunity, as a good opportunity, quote unquote, to buy a call? Yeah, I can answer that. The CG group is presenting itself as a great bullish trend. If I am looking to buy a call, then I would want to be buying calls on bullish trends. Yes? Bullish predictions. Yes? You can answer that question yourself. I think it's safe to say that right now we've got a trend that's forecasted to move higher, and now I am going to open that chart and take a look at it and do some individual analysis on that chart using the predictive indicators and the predictive information. Let me draw your attention over here. I told you it was step by step, right? We started out with our trade plan. We talked a little bit about options. We've walked through the overall market overview. We've scanned for some opportunities, and now we're doing some, I like to call this a visual inspection. I like to one of the steps in the process is get it out of the scanner and take a look at it with the predictive indicators or whatever indicators you use to make sure, going back to that trade plan for you, let me bring it back up, that your entry and exit based rules, the entry and exit based rules using your technical indicators are matching, which means I need to identify and apply a set of indicators that are consistent and proven to provide an edge, know in advance what the indicator reading is or what the indicator reading you're looking for to say that is a good trending opportunity. That's the step that we are in the trade plan, and I'm ready to do that now in the VantagePoint software. All right, so let's take a look. I see that my blue line, my predicted moving average, is pointing higher, which tells me that the trend is expected to be higher. So I've got bullishness on here, and literally I call this process the AI sentiment, because you've heard of trader sentiment, you've heard of market sentiment, you've heard of professional sentiment. In this case, I've got generative AI providing me a sentiment around this trend. So I'm going to read my predictive indicators and understand whether that sentiment is bullish, bearish, or consolidated. Makes sense if you ask me, right? So I can look at this and see that I've got bullishness from a forecasted trend standpoint. I've got bullishness from a forecasted high, forecasted low. I've got my neural index bullishness. I'm drawing these lines on here just to kind of give you a sense of what my eyes are looking at. I'm getting bullishness from, so far, we've got 4 predictive indicators I've done analysis on. I've got bullishness on my 1-day momentum predictor, bullishness on my 2-day momentum predictor, and bullishness on my 3-day momentum predictor. So right now, we've got 1, 2, 3, 4, 5, 6, 7 indicators predicting bullishness. And these are the same indicators we looked at within our scan. So now let's go a step further. Hey, Rob. Oh yeah, Rob, this link is shareable. This live session will be found on our VantagePoint, our VantagePoint AI page on YouTube. So if you haven't subscribed, tell your friend to subscribe. Everybody can subscribe to it, and this is free content that's available for you. You can certainly share it with some. Matter of fact, if everybody shared this with 5 people, then I imagine we'd be helping and empowering traders across the world. So have at it. All right. So let's take a look. Now let's add some other indicators. I'm going to add verified support, verified resistance. These are indicators that VantagePoint utilizes to find support and resistance levels. Once somebody starts using VantagePoint and they understand the predictive indicators, they can add and layer additional indicators like this on. I'm doing that now because I understand the key indicators that come out of the box, the default indicators. I like to layer on multiple sets of indicators, multiple kinds of indicators. I want to have a comprehensive view of what the market is expected to do. And by the way, that's not just in VantagePoint, regardless of the tools you're using. I keep saying this just because from an educational standpoint, I want to provide as much educational content as I can. I always like to make sure I'm getting a comprehensive view of the markets. I need some information related to seasonals. I need some information related to the overall trend, momentum. support and resistance, right? Volume information, volatility information. If I can get a more comprehensive view of what that trend is expected to do in a short amount of time but be very effective, that's the ultimate scenario for me, right? And in this case, I'm taking my time walking through these indicators, but when you make this part of your trade plan, it happens fast. You can do it very, very fast, right? Excuse me. Get a little bit more water here. This is a live session, if you can't tell. Hey, Phoenix, I see your question. Where would a good entry point be for CG? I guess that's up to you. I don't know your trade plan. I don't know your risk tolerances, but we will walk through. I'm going to keep, this is a step-by-step process, so I'm going to keep on going. All right, so we see support and resistance, and what I'm looking at is I want to make sure that there is some room between the next resistance level and the close price and the predicted price. I've got that room, so there is still some bullish expectation or some bullish room left on CG. So remember, this was at 6:30 p.m. Eastern time last night. That's when I would have done this process and walked through this analysis. So before the market ever opened today, I would have done everything that you and me and everybody is doing right now would have been ready for that 9:30 bell, right? So let's keep on going through this. So we got bullishness across the board so far. I am going to go in and I'm going to add some advanced indicators that are predictive as well. I'm going to add %R. I'm going to add, what else do I have in here? I'm going to add RSI. These are predictive indicators within the VantagePoint software, and they're, you know, these are add-on indicators that some advanced traders like to use. But when you look at this, you can see that I've got, in this recent trend, I've got some bullishness going on from these indicators. So I still have bullishness or consolidation across the board, and I can layer on a whole host of indicators. For instance, I can put on my volume indicators, right? You can see that volume is increasing bullish volume. I can add ATR, right? I can add ATR to say, all right, if I put ATR on here, is ATR dropping? And it is. Remember, in an ATR situation, which is the average true range, the range of the candles can determine volatility, which can impact bullishness or bearishness. If my candle ranges are shrinking, that indicates more bullishness. Usually you get, well, just look at this screen. Look how big this bearish candle is. Look how big this one is. A lot of times you'll see bigger candles when they're red because of how volatility and fear works, which means if the range of the candle is smaller, I can expect some bullishness, and I can see the range of the candle is getting smaller based on this. Let me just stop this call for a second. Sorry, it's a live session, so that's going to happen sometimes. All right, let's keep on working through it. Let's keep on working through this so that we can come out the other side with what we expect from a CG standpoint. So if I look at the CG group, I can see there's bullishness from those indicators. I can also use some seasonal information, seasonal pattern, to understand whether or not there is bullishness in the seasonal indicators. I think everybody can see that. These are add-on indicators. These are extra indicators that I like to use day in and day out to get that comprehensive view. But no matter what, I'm getting bullishness across the board on CG. So I can be confident and comfortable that at 6:30 last night that CG was expected to move higher today. So the next question comes down to, which strike price would I be looking for? What expiration date would I be looking for? I used my volatility to find a good opportunity. So then what do I do in this scenario? Well, the good news is that you've got a predicted high and a predicted low here in the VantagePoint software. At 6:30 last night, you can even layer on the strike price indicator right into the software program to find some strike prices that could meet your needs. And this says there's a strike price down here at 30, right, from a Carlyle Group standpoint. So you could go into your platform and say, I can look at my strike price and determine, and that's got a very high delta from that strike price standpoint. But no matter how you slice it, you can see that if you go to your broker's platform, that strike price and that bullish trend is below the predicted high and predicted low, which means the likelihood that I make money very quickly on CG is high. So now I can zero in on my predicted high and predicted low to select a strike price. Look, nope, let me zero. I said zero in and then went further away. There we go. Here's the predicted high. Here's the predicted low. In this predicted high and predicted low scenario, I can literally use this and say if the predicted low is expected to be 31.81, that's the predicted low, and the predicted high is expected to be 32.39. If I can find a strike price within that range, great. If I can find a strike price below that range, great. The predicted high and predicted low are going to help you understand how likely a stock is expected to trend. If that's the predicted high on this stock, I don't want a strike price outside of that predicted high. I don't want a 32.50 or a 33. I don't want any strike prices above 32.39 if you ask me. Again, I'm not providing advice here, but why wouldn't I want my strike price to be within that predicted trading range? And the reason I'm saying that is I can buy at the money and still be in that range. I can buy in the money and still be within that range. I can even buy out of the money a little bit and still be in that range. So I'm going to use that predicted, that generative AI prediction here to say I want a strike price somewhere within that range, and I am going to use that range to change my premium. Buying too far out of the money, in my opinion, highly unlikely. Buying slightly bit out of the money or at the money is going to save you the most on your premium, and buying in the money to deepen the money is going to cost you the most, but at least you know that where prices are expected to trade the next trade day. So at 6:30 last night, I would have seen very clearly if this stock meets my normal trade plan, I can certainly be comfortable taking advantage of an option on that, right? This stock, let me see, I'm just going to pull it up right now and see where it's at. The high today, what do we have? 32.53 and a low of 31.87. Let me show you. 32.53, here's the high, and 41, there you go, 32.53, that's the high, and here is the low. That's where this is traded today, and it's currently at 32.38. So all the analysis that we did last night, all of the that we would have done last night, the analysis that we did today said we can expect this to be bullish. We can expect it to trade in that range. And it is, what time is it? It's 12:36 p.m. Eastern time, and it is trading exactly where the artificial intelligence indicated that it would, and those generative indicators, those indicators that the AI said, use these, look at these, played out exactly the right way. And I think no matter how you slice it, that is a valuable process, step-by-step process. Now all I have to do is go to my trade platform, find that strike price that I want. From an expiration date standpoint, let me give you a little tip, a little trick, a little hint. If you set your expiration out 30 to 60 days, you don't have to hold it to expiration. You can sell that option early. So if this thing moves higher and you hit your profit target according to your trade plan today, you could sell that option even though you set your expiration out 30 to 60 days. Setting your expiration out, I like the 45 or more, 45 to 60 day mark personally, but setting your expiration out that far gives that option enough time to mature, but also slows down time decay. Remember what I said, the closer you get to expiration, the more impact time decay has on the value of that option. So if you set an expiration out 45, 60 days, and you only hold it for a couple of days before you sell it because you hit your profit target, well then time decay really never had a chance to build on you, right? That's using some of the options factors to your advantage, right? Yeah, Aaron, I love it. Aaron's question is, what about looking for a stock with predictive bullish activity and selling puts that expire this Friday? I think now was on the list. Hey, Aaron, that's a great strategy. When you understand options and you understand the power of the predictions, absolutely. Even on this case, you could go find something that does that, Aaron. Same thing, same scan, right? If you looked at this and said, hey, let's see, yes, service now is on the list. You're exactly right. We can look at some of these volatility readings to see that the IV is low. IV rank is low, IV percentile is low. Everything's looking good from this standpoint. We've got an expiration of 7/14. So Aaron, just make sure you're checking the expiration of 7/14, right? If you're talking about this Friday's, right? If you look at this and you say, all right, let me see if there's some near-term expirations, about what? 4 days DTE, maybe 3 days DTE. That is a strategy that option traders like to use. And yes, this software can certainly help you with that strategy, because an option seller, all you need now to do in this case is to go up or stay somewhat sideways, right? As an option seller, you stack the odds even more in your favor, and you can see we got a lot of consolidation here, Aaron. By the way, you can see a lot of these indicators are sideways, support and resistance. Like you've got, so I would expect this to go sideways at first blush when I look at this. I haven't applied all the indicators yet, but for an option seller that's close to expiration, that could be a very profitable example. So absolutely. Hey, Rob. Rob's asking, where do I get this software? Rob, there's a link in the chat. It goes to VantagePointForecast.com. For you or anybody that wants the power of the artificial intelligence, has generated these predictive indicators, you can go click on that link. We'd be happy to reach out and answer your questions related to that for anybody interested in that. But that's up to you. I've gone well over an hour here. I've got a little bit more time. If you'd like, why don't we, I think you understand. If anybody here doesn't understand the step-by-step process we walk through today and you want more help understanding it, you certainly reach out. We're glad to help you. But if you understand it and you want to just take a look at some tickers in the VantagePoint software, I've got a few minutes here. If you would find some benefit in just looking at some of the predictive indicators on a ticker that you're interested in, familiar with, and I'm happy to do that as well. Obviously, we can take a look at a few of them and kind of make some assessments on, you know, what the generative AI in the VantagePoint software is saying about a ticker. So I'll give you a chance to hop over to the questions box, the chat box, and just drop a stock ticker in there. I can't guarantee that the artificial intelligence is forecasting for it, but if it's got enough volume and liquidity, and it's got enough history, certainly can. While you do that, let me show you why this artificial intelligence is so powerful and capable of predicting these trends. You know, I'm going to bring up a stock like Apple and just show you something. If you look at the stock for Apple, and VantagePoint had a very powerful forecast on Apple that trended for a long time until recently. But if I click on the market details, and this is for Rob and anybody else, I can literally see what the AI is doing analysis on to generate those indicators. And this is specific for Apple. In this case, the AI is scanning over 10,000 markets around the world to figure out what is influencing Apple. And it's saying Marvell has an influence on Apple, Morgan Stanley has an influence on Apple, right? The Dow, there's even the euro, natural gas, the yen. We're talking about domestic, international markets, ETFs, futures. Gold has an influence on Apple's price, right? So the AI has figured all this out. You don't have to do any of this. It's doing it behind the scenes, and it's using, this is called intermarket analysis, by the way. It's a patented process. But it's using this information to predict where Apple is expected to go with a high degree of accuracy. And it does that for all of the assets, the Dow, the NASDAQ, ServiceNow. They all have their own intermarkets. So I just wanted to give you a chance to pop in some ticker symbols. User PE 623-2000. When you say EC, are you talking about the euro? Is that what you're interested in taking a look at? Because I have the euro here, and we can certainly take a look at the euro itself in the futures market. VantagePoint is certainly capable of forecasting trends in the futures markets as well. And I think you can see that on the screen, and it forecasts it with incredible accuracy. So if you've got some questions, or maybe there's a different market that you want to take a look at, you can let me know that as well. But if you said EC, unless you're talking about Ecopetrol, because that could be the case as well. There's a lot of different tickers out there. So let me know in the questions box if that's the case. We can look at Rivian, sure. Let's take a look. What is the artificial intelligence saying about our Rivian, RIVIN? You can see what VantagePoint is saying is that there was a bullish forecast on Rivian back here on 629. Kind of curious, Rob. What is your idea, your expectation for Rivian? Is this something you're in, something you're looking to get in? Walking through the details of this, I can see that there was bullish trend forecasted 629. Rivian, after that forecast, really just made a monster move to the upside. Looks 62%. Rob, anybody that's in this session right now, answer me this. Would it have been valuable for you to know on 629, and it's a kind of a rhetorical question. Let me tell you right now, it's loaded. Would it be valuable to know that that trend is expected to move higher back on 629? And would it be valuable to know that Rivian was expected to be higher today from yesterday's close, that it's expected to have some bullishness or move higher or move within this trading range? Because remember, this isn't forecasting necessarily an up day. It's saying it could have a low as 2473, right? If it's saying it could have a low as 2473 or be around that area, and you can see momentum, short-term momentum is kind of peeling off here. There's a little bit of, still bullishness left in Rivian. Doesn't mean that every day is going to be an up day, but you can see things are shifting there, Rob, and for everybody else. But man, that would have been if you had been using the scan or used VantagePoint to find that back on 629, that could have certainly done some great things for you. And I can go through and I'm going to pop on support and resistance really quickly to show you that Rivian is really, really deep in a resistance zone, which means we're probably looking at something that has some room to go. This is the 52-week high. I popped the 52-week high on here. This is the 52-week low. So Rivian was coming off of a 52-week low and has a lot of room to that 52-week high, but it is deep in these resistance zones. And if it's deep in this resistance zone, it's going to need some volume and momentum to push higher. Well, I can put on my volume and see I've got bullish volume building. I can go put on some momentum indicators like percent R, RSI, MACD. I can pop multiple indicators on here to get a good assessment. Now, not all these indicators come right out of the box. Obviously, some of these are add-on indicators because not everybody is using or trades with these indicators. So they are certainly indicators that you can add to your VantagePoint software, but they are predictive indicators. All right, and you can see that Rivian does have percent R from a momentum standpoint is a little overextended, so momentum is kind of shifting there, right? Thank you for the hearts, I appreciate that. We can see that the RSI is at the highest it's been in months and months and months, which means that it is overextended, and we can expect a little bit of pullback there. So all in all, what we're saying is that overall the trend is expected to move higher. There's some short-term volatility happening right now that's causing things to consolidate, but nothing really expected. Nothing really expected to, stop this from moving higher. There's a resistance level that we got to pay attention up here at 29, but a little consolidation. I like to call it consolidation station, right? What happens after a train is done in the station? It takes off. Well, consolidation station means that there could be some real bullishness expected here. VantagePoint, not perfect, but it's indicating bullishness. You can decide what to do with it at that point, right? Okay, let's keep on going. SQQQ. Oh, let's see. EcoPetrol. Let me see if it's in the. Thank you for getting back to me on that. EcoPetrol is not in the VantagePoint software. And so you got to ask yourself. And the reason it's not in the VantagePoint software, and this is a good thing, by the way, in my opinion, I don't care what anybody says. If the artificial intelligence can't figure out or utilize those inner markets and determine what's influencing EC, and can't use that information to predict with accuracy upwards of 70 to 87.4%, should you trust your money? Should you risk your money in trading something that the generative AI that is patented isn't forecasting with a high degree of accuracy? I know what my answer is, but you've got to answer that yourself. Is it worth the risk if the AI can't get a highly accurate forecast on it? Ask yourself that question, right? SQQQ. Well, we looked at the Nasdaq already, right? So you're not going to get a very different picture on the SQQQQ, except for the fact that it is an inverse indicator, inverse ETF, and you can see here's a forecast on SQ. If you're getting from a QQQ standpoint, let me show you what I mean for those of you that don't know. For those of you that like to trade the Qs and you don't trade options, here's the forecast on the Qs, and right next to it, I'm going to put the forecast on the SQQQs so that you can see it is an inverse bear. It is triple leveraged, which means the share price of SQQQ is much lower than the share price of the Qs, which gives you access to more shares. That's why it's called a leveraged or a triple leveraged or leveraged ETF, and it runs inverse. So it's a leveraged bearish ETF. So Butchie, you can see exactly what the artificial intelligence is saying there. I can throw on the predictive indicators and see that it's bouncing off of a recent support level. That support level also syncs up with a 52-week low. So it's coming off of a 52-week low, has some short-term bullishness in it. It's a fresh bullish crossover, which means there could be a reversal on the horizon. TSI, predicted stochastics, predicted percent R. I can add a whole host of indicators in here based on the predictive indicators and see whether or not there is bullishness or bearishness. And SQQQQ has some bullishness building. I can even throw on a seasonal indicator and see if that's something that happens traditionally with the season. And you can see, based on the fact that it's creating higher lows, it is supported seasonally as well. These are predictive indicators available only in the VantagePoint software. So if there's something there that you're interested in digging into and you don't have this software, let me know. If you are a VantagePoint family member and some of the indicators that I'm looking at are new or interesting to you and you may want to add them to your software, let us know that as well. You can call us at 1-800-732-5407 or put something in the chat and we can reach out. APLD for Richard. Thank you. Is that it? Did I read it? APLD, not something that is forecasted in the VantagePoint software, Richard. Again, back to that question I asked earlier, right? Good. All right, let's see. All right, I don't see any other questions or any other tickers. I'm just looking at the chat to make sure I'm caught up. I am caught up. I'm approaching an hour and a half mark, and I think we've done it today. We walked through a step-by-step process for trading options using artificial intelligence. We started with creating a great trade plan. We started with understanding options details a little bit. Then we rolled right into understanding the overall market overview using the predictive indicators. We scanned for some good options trends based off of the predictive indicators that are generated with the artificial intelligence. The next step is we looked at the charts, looked at the indicators for potential entry opportunities, use those predictive indicators to refine strike prices, to refine and use volatility in our favor. So I think we've done it today. Thank you for being a fantastic audience and getting involved in the questions box and the comments box. Always enjoy providing as much free content as possible. And if you have any questions, don't hesitate to reach out. And if you haven't, one last time, subscribe to the VantagePoint AI YouTube channel. Subscribe because you will get notifications anytime we're expected to go live, like today's session. So again, thank you for your time today, and thank you for letting me give you the view from my vantage point. Have a great day, everybody.